James, you're the ETF expert. One of the biggest differences between 2021 in 2021, Gary Gensler was still dragging his feet, not approving the ETFs. I don't think he was sued yet by Grayscale at that point. And so now we had the approval of the ETFs. They've been the best performing ETFs of all time. I think it's safe to say that now.
Yeah, not even close.
Not even close.
Not even remotely close.
And so that's a big difference between the two. We just had options approved.
I love that. Not even remotely close. This is Bloomberg's ETF expert right here, by the way.
Yeah. We just had like options approved, and I came across this article in the Financial Times talking about even like different types of ETFs related to Bitcoin, like with like covered call strategies and like limited downside risk. Can you just talk about like where this is going even from here? Because it's already been a great success, but it sounds like this ETF environment around Bitcoin is going to even expand.
Yeah, so like
farther.
you talked about how adding options really adds liquidity. It's like I kind of like to think about options as like if you think about like an ETF or an investment thesis or investment product, like the sun is at the center and all these other things around the outside that can add to the liquidity, add to the growth and strength of the market. And options is one of those things because one, people can hedge. They can generate income on that asset if they want to with selling calls to the upside. They can obviously buy puts. They can do all these complex things with it. And also like banks, like one of the things that banks make the most money on are structured products. They guarantee you this, your upside is capped to say 15% on the S&P 500 and we'll cover your any downside loss to 20% or something like that. And they earn a lot of premium on that. That's how they earn a lot of their revenue. And one of the fastest growing areas in the ETF market in the US is buffered products, these structured defined outcome ETFs where you say, I know what the max I can return is and I know what the maximum loss I can return is, or I'm buffered against the first 10% of losses or things like that. And there's already been a ton of filings out there for 100% downside protection on Bitcoin ETFs. And those
So just you're guaranteed not to lose money. You cap
Yes.
your upside. But
Correct.
How does that work? So
you
like,
make money because it's so volatile. The more volatile is a similar thing to the MicroStrategy. Why there's a lot of value in the converts because there's the vega in those options markets. So you're not guaranteed the return because it has to go up for you to get that return still. But you can basically hedge your complete downside. But the benefit here is one, all those options launched, and one of the things they launched with is like the smallest limit on your position than you can possibly have, 25,000 contracts. So like you have all these ETFs launched, they are only allowed 25,000 contracts, which is a real little. And then you have all these other ETF issuers that want to launch those types of products you're talking about, covered call, defined outcome, buffer, you name it, whatever you were trying to do. But if they run into those position limits, like the ETFs are screwed. But then you have CBOE launching their options contracts that are cash settled as well. You have some from the CME. And then also it's expected that the SEC, CFTC, and OCC, the Options Clearing Corp, are going to increase those limits. So basically all these guys are filing these ETFs now, one, because all these other options have come out, and two, they're expecting that limit to be increased so they won't hit those limits when they open these ETFs. So expect like spaghetti cannon to be thrown at the wall to be seen what sticks. Like it's good. There's going to be a ton of shit thrown at the wall.
Is that limiting? Are there any of these live yet right now?
No.
Okay.
So 75 days from like 2 weeks ago, so 3 months.
Soonest that could happen.
Yeah.
do you think it's going to be a similar? I mean, I remember you and Eric called it the Kentucky Derby. You think it's like a first mover advantage, like who gets first?
Maybe
these things, or
no, not really, because these things are sold, not necessarily bought in a way. So like most of the Bitcoin ETFs, like it's people going out looking for it. A lot of ETFs, that's the way they work. But with these buffer ETFs, there's like a handful of issuers that are really known for this, and they have a large investor base. And they just kind of be like, hey, you want to invest in Bitcoin, you're looking at adding to it, but you're scared about the volatility, you don't want as much downside risk. We have this product for you, and then they sell it to you.
It's like Bitcoin with training wheels.
It's exactly what it is, 100%. Yeah.
I don't want it. I want raw Bitcoin.
I mean, saying you want the upside, but you can't handle the downside really is training wheels for Bitcoin. It's funny.